Good evening, all. I hope I am audible to all, right? So in the last session, we were talking about earning per share. So far, we have discussed EPS, how to calculate the basic EPS, right? But we were discussing regarding the bonus issues, right? I'll give you one question from myself, rather talking about the question of the study material, so that we'll get some sort of better clarity that why we were asked there, right? For example, let's say on 1st April, I am taking period from April to March. On 1st April, we were having 10,000 shares outstanding. On 31st of August, we have issued 5,000 shares. At full price. On 30th September, I have given 1 share bonus for every 2 shares. And at last, 28th Feb, I issued another 500 shares. We need to find out the weighted average number of shares in this case on 31st March. I hope everybody understood the concept, understood the question here. What we need to find out, that's something we are clear about. The only thing which we have here, which we need to consider, is this bonus issue. So let's first understand that what would be the relevance of the bonus issue. So we are going to see on 1st August from 1st April till 31st August, we have 10,000 shares, which is for 5 months. Then we have 1st September, sorry, 1st September to 30th September, we have 15,000 shares, that is for 1 month. Then from 30th September, which is 1st October, till 28th Feb, how many shares of bonus we have given? How many shares we have given as bonus? So bonus shares are 1 for every 2 shares. So I have 15,000 shares. So I will do 1 by 2. So if I do that, my bonus issue would be 7,500. So 15,000 plus 7,500 shares at this point for October, November, December, January and February for 5 months. And after that, for 1 month, which is 1st March till 31st March, we have 23,000 shares because I have issued 500 more shares. Once we have got this, what we need to do, we need to multiply this with the numbers. 10,000 shares we have for 5 months. 15,000 shares we have for 1 month. 22,500 shares we have for 5 months. 23,000 shares we have for 1. If I do that, I will get the weighted average number of shares. But the only thing which we have not considered here, this 22,500 shares includes 7,500 bonus issues. And in bonus issue, we assume that these bonus shares were always been there. Right? So we don't have to give them any weightage. We have to consider that these bonus shares were always been there since beginning. Now, when since beginning? It means bonus for 10,000 shares, which is 5,000 shares were given from 1st April. But bonus for these 15,000 shares, the extra 5,000 shares which we have got is only given when they are issued. I cannot give bonus issue before they were in issue. So that is the reason to give them the impact of the bonus issue. What we find out? We find out bonus element, which we also call it bonus fraction. We need to multiply the bonus fraction with all the calculations before this issue. So before this, in these two calculations, 1 and 2, we will multiply the bonus fraction. Now, what is the bonus fraction here? Bonus fraction, which we discussed earlier. So how do you say there are 7,500 bonus issues? So 7,500 bonus issue means up to this date, how many shares we were having? 15,000. So on 15, out of 15,000, for every 2 share, I am giving 1 share. Okay. For every 2 share, I am giving 1 share. Now, what is the bonus fraction? Bonus fraction, which we discuss in case of bonus issue, is new number of share after bonus divided by old number of shares So what is the new number of shares? If I give bonus, right, what was the bonus fraction? For every 2 share, 1 share would be given. So it means the old number was 2. This is pretty clear. But how many shares we are giving to each and every one? We are giving 1 share. So it means 2 was there earlier, plus 1 I have added. So my bonus fraction will be 2:1. Sorry, 3:2, right? So Aditya, again, 15,000 shares are there. If you have 2 shares, you will get 1 share extra. What does it mean? If you have 2 shares, you will get 1 share. If you have 10,000 shares, you get 5,000 shares. If you have 15,000 shares, you get 75,000 shares. Is that okay? So I guess this is fine. So now we are into this bonus issue again. We got this bonus fraction. This bonus fraction, as I mentioned, will be multiplied with the transactions before the bonus issue. So 3/2 multiplied by this and 3/2 will be multiplied by this. Now we got the bonus element imputed or added into it. So let's calculate everything. So these shares which we have got, all these shares collectively turned out to be 19,417 shares. I hope this is fine with everybody. Right? This is after the bonus issue. We have multiplied the bonus fraction with the transactions or with the calculations before the bonus issue. If you do that, the bonus element would be given to all these. It is not up to here, but for the previous year also. So for previous year also, I will go and restate EPS. I do that. Whatever number of shares were there previously, let's assume in the beginning there were shares 10,000. So how many bonus do you think 10,000 shares would be getting? 1 share for every 2 shares. So I am doing EPS right now, right? 1 share for every 2 share. If I multiply 1 share, means I will go and multiply this bonus fraction. If I multiply that bonus fraction with it, then it means those 2 shares, means those 10,000 shares have been given a bonus of 5,000 shares. So my weighted average number of shares for previous year would become 15,000, and I'll calculate the EPS according. I hope this is fine with everybody now. This is about the bonus issue, which we have discussed last time also. Right? Now, similar to bonus issue, we have a right issue also. Similar to bonus issue, we have right issue also. Right? So Akash, you can ask the question, the same question just after this EPS is done, so that we can take that up, right? So once I do that, I'll try and take that question to answer your query. Right. Now coming on to this, we are talking about right issue. Now what is happening with the right issue? First of all, we have been given with profit for previous year 2019 and profit for 2020. So 2019 profit is given as 11 lakh and given as 15 lakh. Now what we are trying to do is, number of shares which were there prior to this was 5 lakh shares. Right? Number of shares which has been there. What was the number of shares? Number of shares were, Suraj, I guess I have already told you that this is earning per share topic, EPS. So number of shares were 5 lakh. Number of shares are 5 lakh. But it says company has done a right issue. Right? Company has done a right issue. And right issue was done on or within the period where the last date for the right issue has been considered 1st March 2020. Now here the dates which are considered are 31st December. And right issue was done on 31st March 2020. What is the right issue? Right, from 1st Jan, the number of shares are 5 lakh. On 31st March 2020, the right issue which has been done is, right issue is 1 new share for every 5 outstanding shares. Right? When we have done right issue for every 5 outstanding shares, so how many right issue we are doing? Right? How many right issues we are doing? So the right issue in this case is 1 share for every 5 share. but the price for this right issue is 15, right? If I just remove all these, right? So the right issue which we are talking about here, we have done one for every 5. So it means 1 lakh new shares have been issued in the right issue. The price which we have given to the right issue is 15, whereas the market price was 20. So the right issue was done on 1st March. I have wrongly considered 31st March. Okay. So the price is 15, whereas market price is 21. Now, in this case, we are giving some sort of bonus, right? We are giving some sort of bonus to the existing shareholders, but the bonus this time is not given in number of shares. Earlier, the bonus was given in number of shares, right? I was giving 1 share for every 2 share free. But in this case, instead of giving bonus in the form of share, I am giving bonus in the form of amount, which is 6 rupees discount. When I am giving 6 rupees discount, that 6 rupees is going as a benefit to the existing shareholder. How we find out that benefit? That's something we need to understand here. So I will calculate the transaction here. 1st Jan to 1st March, which is 5 lakh shares, which is for 2 months. But after 1st March, so 1st March to 31st December, shares became 6 lakhs, but for 10 months. Question comes that how the bonus element is being given. So for that, we will just apply the same concept which we have applied in case of bonus issue. What we are going to find out? We are going to find out bonus fraction. And please make a note of this because this is a bit complex than what we have seen earlier. So in this case, we are going to find out the bonus fraction, but bonus fraction in this case would be a bit different. This is like a discount, exactly. This is gone as a discount, but discount in the form of bonus. Because you are already a shareholder, so I am giving a discount. So this is the bonus fraction which we need to consider. The bonus fraction is market price upon theoretical X right price. It means what is the price derived considering the bonus which is given to the shareholders. So what was the market price? Market price is given as 21. Now we need to find out the theoretical X right price, and there is a formula for theoretical X right price. Formula is how many shares are getting this bonus? How many shares, if you have, you will get a right to acquire another share at discounted price. So for that, you should have 5 shares. Now, if you want that 1 share and you don't have anything, what you need to do? To get that 1 share, you need to buy 5 shares at 21 rupees. So it means how much money you have to spend to get that 1 share? 21 into 5. So first you need to spend 105 to get that one share. And how much you will spend on that one share? To get that one share, you need to pay 15. So what is the price of one share? 15. So if we look at the we are just trying to figure out, Meenal, that how the bonus element in the form of rupee, which has gone, how that rupee bonus we can convert that into number of shares, right? So this is the formula to get that element, right? So theoretical exercise price was, if I want to get this one share extra for 15 rupees, what all I need to do if I don't have those shares? First, I will buy 5 shares at 21. Then I will buy one share. So it means the total 6 shares of mine would cost me total of 120. If 6 shares are of 120, what is the value of one share? One share would be of 120 divided by 6. So the theoretical exercise price of the share is 20. So what is the formula, or what is the bonus fraction here? So the bonus fraction here turned out to be 21 by 20. And with which calculation we are going to multiply it? We are going to multiply this bonus fraction with the calculation before the bonus issue. So this was happened here. So 21 by 20. If I do that, I will get the numbers, and the total would come out to be 587,500. So Nandiswaran, again, I am telling you, if I want this one share for 15 rupees, right? Let's assume today I find a scheme for you that buy 5 Coca-Cola bottle for 30 rupees. The 6th one would be given to you for 10 rupees. So it means to get one bottle of Coke, 10 rupees, first you need to buy 5 bottles of Coke. So it means you need to spend 150 to get this one bottle of Coke. So it means these 6 bottles would cost you 160. So what is the price of one bottle? 160 divided by 6. Now replace the Coke with the share. You get the right answer. Is that okay with everyone? So this is how we got the bonus element. This bonus fraction get multiplied with the transaction before the bonus issue has happened. The same way which we have done in the earlier case. By doing this, I got my weighted average number of shares. So weighted average number of shares for this year would be 5,87,500. And my EPS for this year would be 15 lakh divided by this 2.55 is actually the EPS for this year. Right? 2.55. So 6 lakh into 10 divided by 12, this is the answer we are getting. Right? So 50,000 into 10, right? It should be 5 lakh only. Aditya, just do the calculation again. You will get the right answer. Okay. So this is about 2020. But as I mentioned, whenever we have bonus element going, that bonus element is not just restricted to this year. That bonus element always be considered with the previous year also. So I will go back and check the amount for previous year also. What I need to multiply? I need to multiply the bonus fraction. What was the bonus fraction? 21 divided by 20. If I do that, the number of shares become 525. So this divided by 525. So I get 2.10 as my bonus. Okay. So theoretical exercise price means that what exactly would be the price of each share if we include the bonus element, so that's something we get. So I guess everybody is clear. Here also we can get the same number if the issue was not been done, right? Because we are giving bonus, right? We are giving bonus. So if you remove this and I say 5 lakh was the number, then you get the same impact everywhere, right? Because here the bonus is in the price, not in the number of shares. That is why. Okay, Kunal. So we are done with basic EPS, which includes bonus or split. So bonus or split is same thing, and right issue. Right. Now the next thing which we have, similar to basic EPS, we also need to calculate diluted EPS. Now diluted EPS means right. Diluted EPS means, anybody who can tell me the meaning of diluted EPS? What is dilution? Dilution means when my EPS can come down, when my earning per share can come down. Now thing is, diluted EPS is actually just a disclosure which gives warning to existing shareholders. What kind of warning existing shareholders are getting? Warning which existing shareholders are getting. Suraj and Prakash, why we are getting or why we are multiplying the bonus section to the previous year numbers? As I mentioned, right? Why we have multiplied the bonus section to the previous year numbers? If you remember, we discussed whenever the bonus issue happens, profit for this year changes, and we assume bonus was always been there since beginning. When bonus is always there since beginning, so we are considering it was there in the last year also. That is the reason we have multiplied bonus fraction. So 5 lakh into, right, into 21 by 20. Okay, coming back here. Dilution means reduction. So which gives, we are giving warning to the existing shareholders. What kind of warning? We are giving warning that company has some potential ordinary shares. They are not share right now, but they can become share. Now, what could be the potential ordinary shares? Potential ordinary shares could be convertible debentures, convertible preference shares, share options, etc. So we have potential ordinary shares, which are these. If they get converted, what would be the impact of this on earning per share? So this is something which we give as a warning. Right, so that was for comparison. So we are giving the warning, and warning for every share which is there, right? Every potential ordinary shares. So let's understand this with the example. So net profit of the company is mentioned here as 1 crore. Number of share outstanding is 50 lakh. So what is the basic earning per share? What is share option? Share option means that company has given options to the existing shareholder, nothing but a right option, that you can buy the share at this price. Right? Company has given the right option to the shareholders that we are issuing further share, that you have a right to get the share issued. Or option could also be when company gives the ESOPs, employee stock options, right? That employee can buy the share at the lower price in the future whenever they, whenever they earn those options, right? So profit is mentioned here. Right? Profit is mentioned here as 1 crore. Number of shares are mentioned here as 50 lakhs. So what is the basic EPS? Basic EPS is simple. We have calculated basic EPS. This divided by this. So we got basic EPS as 2. This is pretty simple. However, company says that company has 12% convertible debentures of 100 rupees each. And what is the value of debentures? Value of debentures is 1 lakh. Right? Number of debentures of 1 lakh. So number of debentures of 1 lakh means what is the convertible debentures they have? So number of debentures they have 1 lakh. Value of debentures 100. So the total value of debentures is 1 crore. Now company has debentures of 1 crore, which is 1 lakh debentures. Each debentures is convertible into 10 equity shares. So means how many shares it will get converted into? Number of shares in which it will convert is 100 or 1 lakh into 10. So it means if they get converted, right? If they get converted, they are going to convert into 10 lakh shares. Kunal or everybody, here we are not talking about on the date of conversion, up to the date of conversion, till the time it is potential ordinary shares. Once it is converted, diluted EPS will not be applicable. So up to the date of conversion, this calculation would be done. Now, what is the interest we are paying on this debentures? Debentures interest would be the value of 1 crore into 12%, right? Whereas the tax rate is 30%, right? So now thing is, what was the earning? We have the profit of 1 crore and weighted average number of shares of 50 lakh. Now we want to give the warning that what will happen if these shares, what will happen if these debentures get converted? Will it impact the number of shares? Will it change the number of shares? Answer is yes. What is going to happen if these shares get converted? The number of shares will increase with 10 lakh shares. So the number of shares after conversion would become 60 lakh. It will definitely reduce my earning per share because the number of shares are going up. But if these debentures are converted, will there any impact on my profitability? How much profit will get increased if these debentures are converted? So the profit which will be increased is actually, so how much impact on profit? Impact on profit would be my interest saving. So interest would be saved how much? 12 lakh. I will save interest of 12 lakh. But if I save the interest of 12 lakh, my profit will go up. If profit will go up, I have to pay the tax on that. How much tax would be? 30% on this, which is 3,60,000. What would be my net earning, which is available for the shareholders? Net earning which will be available for the shareholders is 8,40,000. So it is going to increase my profitability with 8,40,000, whereas the number of shares are increasing by 10 lakh. So my total profit will become 1 crore plus 8,40,000, right? 1 crore plus 1 crore 8,40,000, and the number of shares would become 60 lakh. Now, will it impact the EPS? The EPS now would be, EPS would now be this divided by this, 1.80. What was my basic EPS? My basic EPS was 2. Is it reduced? Yes. So this will be treated as diluted EPS. Is that okay with everybody? Please say yes or no. Is that okay with all? right? I hope this is fine with all, right? Okay. Now I just take another scenario here. Let's change the scenario just a bit and understand that what is going to happen after this. I have taken everything here same, and I say that profit was 1 lakh, number of shares was 50,000, basic EPS 2, number of debentures are 1 lakh, but these debentures will be converted into 5 debentures, means 5 shares each. So how many shares will increase? These shares will increase in 5 lakh instead of 10 lakhs. If shares are increased by 5 lakh instead of 10 lakhs, what is going to happen? The profit will be 10 lakh 40,000. Sorry, 1 crore 8 lakh 40,000. Whereas the number of shares will only increase by 5 lakh. So number of shares will become 55 lakh. This is the change scenario. This is not the same scenario. This is the different scenario. If this is the case, I see that the shares, the diluted EPS is coming as 1.971. Is it diluted again? Answer is yes. But if I change the number again and I say that instead of 5 shares, it will only increase into or only converted into 2 shares each. 2 shares each means the number of shares which will be issued after conversion would be 2. So the number of shares which will come here instead of 55 lakh, it will only come 52 lakhs. Why profit is not changing? Because that is the interest which we are saving. So the interest is same. If the interest is also changing, then it will, right? Then it will come here. So Himanshu, again, 10 lakh shares were in issue. Sorry, 50 lakh shares were in issue. 10 lakh will get added if those shares get converted. Is that okay? And Janaki, that the number of shares only increase, value of the debenture is same, right? Value of the debenture is same. So profit saving is same. Now, if I convert it this way, what my new EPS would be? New diluted EPS is 2.085, whereas basic EPS was 2. Is it diluting? Is it reducing? Answer is no. When it is not reducing, what happens? This kind of shares or this kind of convertible or potential and ordinary shares are known as anti-dilutive EPS. Instead of diluted EPS, it will be called as anti-diluted EPS, and my EPS would be 2 and basic EPS would also be considered 2. So in this case, when it becomes anti-dilutive, so my basic and diluted EPS both would be considered same. I will not show higher because I am giving warning. I am not saying that you go and buy that. Is that okay? That is the kind of warning which we are giving. And this warning we have given, right? This warning we have given to the existing shareholders. I hope this is fine with all. Right? I hope this is okay with everybody. Right? This was about, that was about the basic and diluted EPS. in the case of convertible debentures. Now what happens if we have options, share options? If Kunal, as I mentioned, if my EPS is going up, it is not the warning, it becomes an attractive point. So in that case, we call it anti-diluted. When it is anti-dilutive, then my basic EPS and diluted EPS both becomes same. So Radha, is anti-diluted EPS good for the company? Not good for the company. It is good for the investors, right? EPS is not for the company. EPS is actually for the investors, right? So people will start investing in the company. I hope this is fine with all, right? Now, so Saurabh, the diluted EPS would be, right, would become anti-dilutive, right? Or when diluted EPS could be greater than basic EPS, when the profit saving is higher than the number of shares which we are going to issue, right? So when the ratio of profit saving is higher than the number of shares we are issuing, then it will always turn out to be diluted EPS. Okay. Let's go further. We have been given with the net profit here. Net profit here is mentioned as 12 lakh. Weighted average number of shares are 5 lakh. Average fair value of the share are 20. There are share options of 1 lakh shares, right? There are share options of 1 lakh shares, right? And exercise price was 15, right? So what exactly we are trying to say? Again, I think one point which I am again repeating for the dilutive EPS. Meenal, we only dilute or we only consider both same when it turns out to be anti-dilutive. If it is dilutive, it is a warning. As you remember, we have always discussed show losses in the statement. Concept of conservatism. Do not show profit in the statement which is not there, right? So that is the reason we give warning. We do not say that it could be a beneficial, go and buy shares, right? So that's something we do not do that. Is that okay? So warning and attraction is two different things. So we are just going for dilution when it comes for the warning. Okay. Now coming here, in case of share options, first let's find out what is the profit. Profit is mentioned as 12 lakh. And number of shares is 50,000. Sorry, 5 lakh. If number of shares are 5 lakh, what is going to be my basic EPS? Basic EPS would be 12 lakh divided by 5 lakh. My basic EPS is 2.4. That's something which we have calculated. But the question comes up that company has given 1 lakh share options. At what price? Price is 15. And what is the market price? Market price is 20. So number of options company has is 1 lakh. Price 15, whereas market price is 20. So if I just ask you, what would be the impact if these options are exercised? What would be the impact on the EPS? So my profit and number of shares. So profit which we have 12 lakh, number of shares which we have 5 lakh. If these number of options which we have get converted or get issued or exercised, what would be the impact, right? What would be the impact on both profit and number of shares? So the profit and number of shares, what would be the impact? The impact of share options once they are exercised would be, it will increase 1 lakh shares, but since no impact on the profitability, it will become 0, right? So number of shares 1 lakh, profitability increase 0. When this is the case, when profit increase is 0, then standard says that when profit increase is 0, why we are using the full amount shares, C share options, bringing some money. How much money they are bringing? They are bringing 15 rupees each. When they are bringing 15 rupees each, I can invest those 15 rupees somewhere. I can invest that 15 rupees in the machinery, means 1 lakh into 15 or whatever number it would be. I can invest that 15 rupees somewhere and I can get some sort of benefit in the future. But can we quantify that benefit? Do we know how much benefit we can make? No. So for that purpose, standard says, let's not complicate it like this. Let's go very, very simple. Let's find out how much money they are getting. They are getting 1 lakh into 15, which is 15 lakh rupees. I hope this is fine with everybody. So how much money they are getting? They are getting 1 lakh into 15. Now the question is, if we want to buy, how many shares we can buy from market using this amount? How many shares we can buy from market using the amount which we are getting from these 1 lakh share options? How many shares we can buy? 15 lakh is the amount we are getting. What is the value of each and every share in the market? Market price of the share is 20. So we can only get 75,000 shares. But how many shares we are giving? How many shares we are giving to share as share options or these option shareholders? So the money which shareholders are, or the money which these people can invest is 15 lakh, and the money which can buy these shares are 75,000 only. But how many shares I am giving? I am giving 1 lakh shares. What does it mean? That there are 25,000 shares which are going for free. Is it okay with everybody? Please tell me yes or no so that we can move further. I hope this is fine with all. If it is okay, then we'll go further. How did we calculate? We calculated how much money we have received from these right holders, 15 lakh. How much market value we have? What is the market price of these shares? 20. So we get 75,000 shares, but we are giving 1 lakh shares. So 25,000 shares are going for free. So for these shares of 25,000, I will include that in our dilution. So the number of shares total would become 5 lakh. Number of shares total would become 5,25,000, whereas the profit would remain the same. What would be my diluted EPS? My diluted EPS would be 12 lakh divided by 5,25,000. What was my basic EPS? My basic EPS was 2.4. So this is 2.29. So in this case, we can say my EPS price has come down. Exactly. This is the kind of a bonus which is going there. So I am just considering what is the bonus shares which are going to these right holders. So Janaki, again, right? I am coming back to this. There are two set of shares which are going. One is 75,000. One is 25,000. 75,000 shares are actually bringing in money. How much money? 15 lakh. What you can do with this 15 lakh? With this 15 lakh, you can invest in the business. You can buy machinery. You can do lot many things. We can generate further profit. Now, how much profit that will generate? I don't know. That is the reason which I don't know. I have ignored this. But the number of shares, which is 25,000 going for free, are they bringing anything? No. Will it generate any profit? No. So that is the reason I have only considered 25,000. I hope this is explaining the concept well. Right? So this is all about the EPS concept. Right? This is all about the EPS concept. Anyone has any issue, we can discuss. Right? There was someone having some problem with the lease accounting standard. So let me just find out that issue and we can move further. So Akash, you have mentioned cost was 40 lakh, sale price was 39 lakh, fair market value is 35 lakh, right? So in case of leases, cost 40, fair value 35, and sale price 39. Now the question is why somebody will buy higher than the So Prakash, Radha, again, whenever the share options are there, share options will never bring in any profit. Means there would not be any saving. So that is the reason always free shares will add on to the dilution, right? Always. And this is authentic formula. Why we are ignoring 75,000? Tomorrow, let's assume company decides to issue further shares at the full market value. Can those kind of shares be treated as dilutive shares? Answer is no, because we are planning to issue that at the full market value. They will bring in the money. We don't know what we are going to do with that money. That is the reason anything which is going at the full market price, no need to worry about it. Okay. Now cost is 40, fair value 35, sale price 39. The point is why somebody will pay extra 4. So it means the 4 profit will not be treated or will not be taken to the P&L straight away. This will be parked in balance sheet and amortized over period. Right? But point is that when you are considering 35, the cost is 40. It means at the same time, if you are parking 4 profit, there was a loss which you are considering right now. You are saying you came from 40 to 35 and then sold it to 39. So coming back from 40 to 35, first you have to record the loss in P&L. Simple. It can be impairment. My property value, asset value has come down. So I have recorded loss. But I sold it at 39. So it means that profit is a bogus profit or a cosmetic profit. That is the reason I am not taking it to P&L. I am parking it to the balance sheet. Of course, Ankita, it will be issued and it will be taken to it will be calculated in the number of shares in the future. I hope things are clear to everyone. If it is fine, we can move on to the next chapter. We have taken the case of, I would say, leases also. I'll take a quick break here for 5 minutes. Then we can start the session again. Yes. So we'll take a break for 5 minutes and then we'll start. Welcome back, guys. So we have covered those two topics. I just take one more query of Radha, which is still related to this only. So Radha, what exactly you are saying? We have profit of 4, right? And we are having the loss of 5. Why we are doing that? Why can't we just take a loss of 1, right? Now, this I want to say only one thing. Is this loss, right? Is this loss which we are talking about genuine loss or not? Is this loss genuine loss? You don't know, right? But if the fair value can come down, it can come. I have purchased the asset for 40. The fair value is 35 now. It's fine. It can happen. But if fair value is 35, can somebody buy it at 39? Not genuine. And if you remember, we discussed only one thing in the last class. Whenever we are talking about the lease transaction, lease and sale and leaseback transaction, we always look at what is genuine, what is not genuine. Genuine would be considered in the profit and loss account straight away, whereas not genuine will not be going to profit and loss account. It will be parked, taken to the balance sheet, right? And then amortized over the remaining period, remaining life of the remaining lease period. Okay, so that was about that was about the accounting issue. That was about the issues related to AS 19. The next topic which we want to talk about is the income taxes. A complex topic, but we will try and see that what exactly the meaning of income taxes in the in the books. What is the meaning of current tax and deferred tax? Does anyone know meaning of current tax and deferred tax? Meanwhile, you find out. I will I will help show you with the help of example. Meanwhile, you write the answer. I will show you the, or I will tell you the I will try and figure it out with the help of example. Let's assume I have a profit and loss account where I have recorded revenue of 1000, cost of sale at 500, other expenses at 100, and in at 90. So the profit which we are getting, profit before tax which we have is 310. Now, if we have tax rate, if we have tax rate of 30%, what would be my tax for this? What would be my tax expense for this? So the tax expense would be 310 into 30%, 93. I hope this is pretty simple. This is clear to all. But the profit and loss account which we have prepared is the accounting profit. So this is the accounting books which I am preparing to calculate the profit. Now my question is, whatever profit I have calculated for my for the accounting purpose, Will tax department consider the same profit? Do we have the same tax rules as per the Income Tax Act? Do we have the same same allowances, same concept for everything which we are following in the accounting rule? The answer may be yes, answer may be no. There are different rules which we have. The allowances are different and everything is different. When the allowances are different, things are different. To calculate tax, companies are required to follow a separate book also, which is tax books. Right? Company required to follow a separate book also, which is known as tax books. They would find out what exactly is the difference between the tax books and the account. Example, I just take a simple example. I'm not getting into what are the allowances which are there, what are the things which are not allowed. We are just talking about that what happens if we are following the simple concept, simple rules here. Let's assume I have received 200 as advance from customer, for which goods will be delivered in next financial year. When we will recognize the revenue in accounting? When we are going to recognize the revenue in accounting, right? And when we are going to recognize the revenue in the tax books. So the tax rule says, as per tax rules, amount should be considered revenue in the period of receiving the amount, right? Instead of matching with the accounting principle, it simply says whenever you have received the amount, that amount should be considered as your profit or as your revenue for that particular period. If that is the case, my revenue in tax books will change to 1200. But in this case, the accounting profit will not change at all right now. When the amount would be recognized in the revenue for accounting, it will be recognized in the accounting in next financial year. Why? When goods will be delivered, when my risk and reward will get transferred, only then I will recognize the revenue for this. Till that time, it will be sitting in the balance sheet as advances. I hope this is fine. This is first case. Right? And because of this, my profit numbers, which was 310 in accounting, it became 510 in the books here. On the other hand, we have another issue. The other issue says the interest in P&L is including 40 interest which is due but not paid. But as per tax rules, this will be included in, this will be included means this will be allowed in the year of payment. So in this year, accounting would have the expense of 90, but here this will have expense of 50 only. It will not have the expense of 90. The reason being that 40, which is accrued but not paid, will be taxed or will be allowed for the tax allowance purpose when the payment would be made. Right? That is how we find out our, right? That is how we find out what is the difference between the accounting profit and the tax profit. Now the income tax rate is 30%. What is the tax expense we have to pay? So the tax expense which we have to pay at the rate of 30%, this would be 165. Now, when I have to pay tax to the government, how much tax will they ask me to pay? 93, which is coming as per my accounting profit, or will they ask me to pay 165, which is coming as per my tax computational profit? So government will ask me to pay 165, right? Not 95, not 93. When government will ask me to pay 165, that tax is known as current tax in the books. That tax is known as current tax in the books. But my overall tax is 93. So what is the difference? Difference is 93 minus 165, which is 72. Right? And we know the reason of the difference. Reason of the difference is written below. And this difference which we are having here is nothing but the accounting adjustment. Accounting adjustment, and this difference will be treated as deferred tax. If it is positive, it means it is a deferred tax income and will result into deferred tax asset. If it is negative, it means it is a deferred tax expense and it will result into deferred tax liability. Does it make sense to everybody? Is the meaning of deferred tax clear to all? So if we go back here, what is the tax? Current tax is the amount of income tax determined, which is payable or recoverable for the taxable income or loss for the period. Whereas deferred tax is nothing but the accounting adjustment on the tax or of the tax effect for the timing differences. Why we call it timing differences? Because something which we have recognized income today will become income in the tax department future. Something which we have recognized expense today will become expense in the tax books in the future, or vice versa. When this happens, it means that is a timing difference. If that doesn't happen, right, something happened in means something recorded P&L today will have the impact in the tax books in future, or something recorded in the tax books today will have impact in the P&L in future. These differences are known as timing difference. But something which is recorded in P&L or something which is recorded in tax books never be recorded in tax books or never be recorded in P&L. These differences are known as permanent difference. Now, the permanent difference example could be so Kunal, generally the calculation is done side by side. The reason is you get to know that why the P&L and tax books are coming different. So automatically you get to know about this, right? Now, what could be the permanent difference? The example of permanent difference could be like fines. Could be expense in accounting, but disallowed in taxes. Now, something which is recorded in the books accounting will never come in the tax books ever. When this would be the case, means these differences are known as permanent differences. Whereas other differences which we talked about are timing differences. Those differences will get nullified or will get settled in the long run. Right? Maybe next year, maybe next to next year, maybe in 5 years, 10 years, but it will become zero. Right? It will become zero. Right? So reasons for deferred tax, which we have just talked about, is that how the balances are appearing in the accounting P&L and how the balances are appearing in the tax P&L. Right? I take another example. ABC has purchased machinery for 10 lakh rupees. Life of machinery is, let's assume 10 years. However, life as per Income Tax Act is coming as 8 years. Now, do you think there could be a timing difference? Means in one case, the amount or the machinery will be depreciated in 10 years time. Right? Amount which will get in one case it will be depreciated over 10 years time. In another case, it will be depreciated over 8 years time. So it means the depreciation amount in both the cases would be different. when depreciation in both the cases would be different, what we are going to do? We are going to find out what would be the what would be the impact on the timing difference and what would be the impact of the deferred taxes. Let's see. Let's assume the tax rate is 30%. So let's plot accounting profit, accounting books, tax books. What would be the depreciation in the accounting for what would be the depreciation in accounting for 10 years? And what would be the depreciation of this in the tax books? Yes, please. What is going to be the accounting? Right. So we need to find out, right? We need to find out the profit, or we need to find out the expense, basically. The expense in the accounting and the expense in the taxes. So for first case, the depreciation would be 10 lakh divided by 10. So 1 lakh is the depreciation every year. Whereas in other case, depreciation would be 10 lakh divided by 8. So 1,25,000 over 8 years. Right? And let's find out the differences now. Right? If this is the case, what are the differences we have? So difference between the accounting depreciation and the tax depreciation would be 25,000 in year 1, 25,000 in year 2, 3, 4, 5, 6, 7, and 8. Right? So 25,000 is the depreciation in year 1, 25,002, 25,003, 25,004, up to 8 years. What would be the depreciation in year 9 or difference in year 9? This would be 1 lakh. What would be the difference in year 10? This is again going to be 1 lakh. Now, if I take the total of all these means up to 8 years, difference is growing, which is up to 2 lakh. From year 9 and 10, difference is coming back, which is 1 lakh and 1 lakh every year. Is that okay with everyone? Right? I believe this is fine with all. Now, how this difference would be treated? I would say that this is the difference which we have got. This difference I will apply with the deferred tax. What is the tax rate? Tax rate is 30%. So this into 30%. So 7,500 year on year up to 8 years, 7,500. Then after year 9, 30,000 will reverse and 30,000 will reverse. So this becomes 0 again at the end of the period. So Aditya, I didn't get 4 lakh. Where 4 lakh you are saying? So 25,000 for 8 years is 25,000 for 8 years is 2 lakh, right? So now we got the deferred tax also. What would be the accounting of deferred tax now? What is going to be the accounting of deferred tax? First thing, is it a deferred tax asset or a liability? Right? What exactly it is? Is it an expense or the implication? What is going to happen? My profit, let's assume is 2 lakh. In this case also, and in this case also, just to explain you, right? So again, nothing to consider here. My depreciation here would be minus 1 lakh. My depreciation would be minus 1,25,000. So it means here I will have the profit of 1 lakh. Here I will have the profit of 75,000. Now, considering the tax rate, what is the tax I will calculate? 22,500. Considering the tax rate, how much tax I have to pay? 1 lakh into 30%, 30,000. It means my current tax is 22,500. But the difference between current tax, which I am paying, and 30,000, which is coming as per the accounting, is now in this case it is expense because it is increasing. So what does happen when tax department has given me extra benefit? This will result into deferred tax expense and deferred tax liability. So the accounting entry which we will pass is deferred tax expense in P&L, which is debit with 7,500, and deferred tax liability in balance sheet get credited with 7,500. And it will go on up to 8 years period. So the first 8-year period, it will be working like this. But what is going to happen in year 9 and 10? So how much liability I would have in year 8? So the total liability in year 8, total deferred tax liability up to year 8 would be 7,500 into 8, which is 60,000. So I have the total liability of 60,000. If I have the total liability of 60,000, how much it is reversing? It is reversing 30,000 in year 9. And reverse 30,000 in year 10. So it will reverse 30,000 and 30,000. So it will become 0. So what I am going to do, what are the entries which we need to pass? The entries which we need to pass in year 9 and 10, debit deferred tax liability, which is in balance sheet, with 30,000, credit deferred tax income this time, because that is the reversal which is going to happen in profit and loss account, which is 30,000. And same entry will be passed in year 10 as well. Is that okay with everyone? Is it okay with everyone? So what has happened here? Again, to summarize it, I am having the difference of the depreciation in year 1 to 8, and the entire difference which we have created, which is of 2 lakhs, get reversed in year 9 and 10. This difference, because it is a temporary difference, at the end this becomes 0. Because this difference is temporary difference, it has created a deferred tax liability because I am getting the benefit here. And up to 8 years, deferred tax liability will keep on increasing. In year 9 and 10, deferred tax liability reverses because the difference start reversing. So that is how we pass the entries: debit expense, credit liability. In year 9, debit liability, credit income. Why? Because this has reversed. I hope this is fine with everyone. The meaning and everything is clear to all. Anybody who has not understood the concept? Anybody who has not understood the concept? So moving further, when do we recognize this? We have already discussed this thing here. Tax expense for the period means current tax plus deferred tax together, right? And how we get to know about the current tax? Current tax is nothing but the amount which we are calculating on our taxable income, right? So whatever amount comes up on the taxable income, that will be treated as the current tax. And the current tax, the difference between the total tax as per the accounting minus current tax is nothing but the deferred tax. But we find out the reason why the deferred tax has been calculated. Current tax should be measured at the amount expected to be paid using the applicable tax rate. Now, from where we get the tax rate? Always every budget will bring in the tax rates. What are the tax rates for that particular period? Those tax rates we use and calculate the taxes. Whereas the deferred tax is nothing but the tax which we are talking about. The rates are the rates which are enacted by the balance sheet date. Enacted means if I know that deferred tax is going to reverse in the next year, and upfront I know what is the income tax rate for the next year. So my income tax rate would always be used for that particular period. Deferred tax and liability, as per the rule, are always treated as non-current liability. It will never be considered current liability, and we are not required to bring it to the present value. Why we are not bringing it to present value ever? The only reason is because this is just an accounting adjustment. Nothing to be paid, nothing to be received. It is just an accounting implication which we are trying to show in our books, right? When it is just an accounting implication, it doesn't matter when it has to be paid, when it has to be recovered, right? Okay, so what exactly we have mentioned in the P&L? We have to disclose the tax expense as per the rules of Companies Act. As per the Companies Act format, we have to bring in the taxes there. We have to bring in that what is the deferred tax, what is the current tax, that is coming from the Companies Act requirement. whereas the reconciliation is not required. Reconciliation in the sense, what was the reason of those deferred taxes? That is not required. Why it is coming lower? That something is not required as per the case. So if we go here, what is there in the balance sheet? We have already discussed. In the balance sheet, we show the deferred tax asset, deferred tax liability. If we are having different types of deferred taxes coming in, means if we are having different rules, in some cases it is coming as deferred tax asset, some cases it is coming as deferred tax liability. That should always be shown separately. So Prakash, permanent difference, nothing. Means permanent difference will be having the tax impact, but it will never result in the deferred taxes. Means if there is a permanent difference, we are not required to calculate the deferred tax asset or deferred tax liability onto it. Right? Okay. So we have certain illustrations now. That was just the disclosure part and everything. We have certain illustrations now which we need to solve. Right? After the illustration, we may move on to the next topic. Right? Anybody has any issue which you feel is important, means which you have not understood? Okay. So one more important thing which we have forgotten here. Whenever we are creating deferred tax liability, it is fine. But whenever we have deferred tax asset, deferred tax asset means something for which the benefit is going to come in the future. So deferred tax asset always means something for which benefit is going to come in the future. Though I am not again talking about whether I'll be able to recover or not. I am talking about that once it will reverse, it will appear as an asset in the books. So I am showing deferred tax asset in the books. So when any asset has to be shown, right? When any asset has to be shown, concept of conservatism says that asset which you are showing would be recovered, right? Means you will be able to realize amount for that. If you have any doubt that you will not be able to realize that amount, then you should not show, because that is the concept of conservatism which we have always learned. So for deferred tax asset, which we are looking at, deferred tax asset means the amount which we can recover from the tax department. For that, we see that do we have virtual certainty regarding future profit? Do we have virtual certainty regarding future profit? It means when we are creating deferred tax asset, means I will be saving tax in the future. That's something we are trying to say. Will I be having profit so that I can save taxes? Now, to save taxes, I should have profit in the future. Let's assume I am a loss-making company. I am incurring loss from last 10 years. And I have some sort of deferred tax asset which is appearing in the books because of some rules. Now the question comes up, the asset which you are showing in the books, will you be able to save this much tax in the future? Then the question appears, to save the tax, you need to have that much profit which can require you to pay the tax. If you won't have profit, no tax requirement is there. If no tax requirement is there, from where you are going to save the tax? So it means deferred tax asset will only be recorded when you have virtual certainty regarding the future profit. And how we can say that it is virtually certain that future will have profit? Maybe by having some contracts in hand, which can show that, yes, these are the work which I already have in the hand. This work will give me the profit in the future. If this work will give me profit in the future, I would be having the enough profit to save the taxes. That's something we are talking about. There is one more concept which is there in the study material, which says when you have tax holidays. Let's say company has invested or company is doing business in special economic zone. And when company is doing business in special economic zone, they are enjoying 10 years tax holiday. Means no tax has to be paid, no tax would be recovered, no tax liability will appear for the 10 years. When this is the case, what we are going to do? If any deferred tax issue arises, there may be a case that I have shown some sort of accounting benefit right now, where the tax implication of this will come within these 10 years. Whenever this comes up and company is enjoying 10 year means any tax holiday period, no deferred tax implication during tax holidays. So during tax holidays, nothing would be considered. Right? I hope everybody is able to understand the concept. Please go through this example. Right? So we have 3 examples to be done. How much deferred tax asset we are going to record for the depreciation? Please guys, please calculate and tell me. So Prakash, as I discussed, that whenever we have deferred tax asset means something which is going to be saved and recovered. Now, to save or recover, you should have enough profit in the future with which deferred tax asset can be reversed. If you won't have the profit in the future, from where you are going to save the money? So for that purpose, it says whenever you have these kind of situation, always consider that you are going to have, means always consider whether you have enough profit in the future or not. If you do not have enough profit in the future, it will be difficult for you to recognize the deferred tax asset. Now, first tell me what should be the deferred tax asset in this particular case. Will it be a liability or will it be a liability or will it be a asset? So in this case, because tax department has already allowed me, right? Tax department has already allowed me better, means tax department already allowed me higher depreciation. What it reflects? It reflects that I have to pay taxes in the future. It means the difference of 3 lakh into 50%, 1,50,000 would be treated as deferred tax liability. Is that okay with all? Right. Okay. Now, next question. So how much tax we are going to calculate here? So unamortized preliminary expenses as per tax record, you can say that there I have already considered 30,000. Here I have not considered 30,000. So we will record that as well. So my difference would be for depreciation, prelim expense, right? So for depreciation, I have 2 lakh in accounting. For tax, I have 5 lakh in accounting. Right. For here I have 0. Here I have 30,000. So what is going to happen? The difference would be this minus this 3 lakh, and the same concept will apply here, 30,000. So this difference which we are having create a deferred tax right? Create a deferred tax liability. Is it okay with all? So this is the deferred tax, sorry, tax rate we have not applied. So tax rate would be this into 50%. So this is on the depreciation. So it will come as deferred tax liability. This is 30,000. Basically, this is the reversal of earlier recognized deferred tax asset, or whatever you call it. So it should also appear as the expense in the books. Okay. Right. I hope this is fine with everyone. Meghna, it won't be the asset. If it is as per the tax books, tax records. So tax record is not having this. It means my tax record will take the benefit here. right? I am recording their 0 and amortizing 30,000 here, right? Is that okay? Right. So moving on to the next, if we talk about from the following details of A Limited for the year ended 31st March 2020, calculate the deferred tax asset or liability as per AS 22 and amount of tax to be debited to the profit and loss account for the year. When deferred tax become asset, when you have recorded expense in the books, but the tax department has not given any benefit to you right now. So there, the tax department will give you benefit later. So that is where you have to record this as in deferred tax asset. I hope this is fine with everyone. Right. Now coming back to this, we have accounting profit of 6 lakhs, MAT. So MAT means minimum alternate tax. So what happens generally is that many companies take the advantage of lot many allowances which are available so that they can reduce the tax up to 0, right? Like what kind of advantage they can take? They can take advantage of all the allowances which may be there. For example, they may go and invest in R&D, right? They may go and buy asset in a particular area or a particular type of asset, so that all these kind of allowances which can be given to them, right, they have taken that and they bring the tax rate to 0. By doing that, right, by doing that, what exactly has happened? By doing that, right, again, right? So Saurabh, I got your point, right? I'll just come back to this, right? I have done that as per understanding, but we will try and change that scenario here and see that how exactly we are going to consider it. So from the following details which we are talking about, MAT is nothing but the minimum alternate tax which every company have to pay when they are trying to take all the allowances which are allowed so that they can reduce the tax rate to 0. Now, if everybody reduce the tax rate to 0, from where government is going to get the taxes? So government came up with the method of MAT, which is minimum tax which government would take even if you don't have profit. Means even if you have allowed all the allowances which can reduce your profit. So for that purpose, what we need to figure out, what is my deferred tax in this particular case? Now to find out the deferred tax, we have understood one thing, one concept, which was what is the total tax expense? So total tax expense is current tax and current tax and deferred tax. Now to calculate the total tax expense, I need the profit. So my profit here is 6 lakh, which is in accounting, and tax rate is given as 20%. So my total tax is this into 20%. whereas current tax would come from the tax books. How much is the tax book profit? Tax book profit are mentioned at 60,000, right, which is mentioned here. If I apply my tax rate there, my tax would be this into 20%, or this into 20%, which is 12,000. So current tax is 12,000. If current tax is 12,000, how much would be my deferred tax? My deferred tax would be 12,000 minus this amount. Is this okay with everyone? Is it okay with all? Right? So my deferred tax comes out to be 1,08,000. But how much tax company has to pay? So company would see what is the income as per MAT. Income as per MAT is 3,50,000, right? And company has to look at what is the MAT rate. MAT rate is 7.5%. Right? So this is the minimum alternate tax. How much extra, right? If current tax is 12,000, how much extra tax company has to pay as compared to the current tax? It is 26,250 minus 12,000, which is 14,250. Right? So company has to pay minimum of 26,250 because the current tax they are getting is 12,000. So the minimum tax would be paid at 26,250 and deferred tax is calculated as 1,08,000. I hope this is fine with everybody. Let's go to illustration number 5. So can you please calculate the amount? So Saurabh, I will discuss that question after it. PQR Limited is accounting year is 31st March. The company made a loss of 2 lakh. Now, if company made a loss of 2 lakh for the year ended 31st March 2015, for the years ending 31st March 2019 and 20, it made profit of 1 lakh and 1,20,000 respectively. It is assumed that the loss of the year can be carried forward for 8 years and tax rate is 40%. By the end of 31st March 2015, the company feels that there will be sufficient taxable income in the future years against which carry forward loss can be set off. There is no difference between taxable income and accounting income except that the carry forward loss is allowed in the year ending 2019 and 2020. Prepare a statement of P&L for the years ending 18, 19, and 20. So let's change this 15 to 18, right? In 2018, company made a loss. How much loss company has made? 2 lakh. Now, what is the tax rate? Has they given the tax rate? Tax rate is 40%. Now, as per the rule, can company go to government and say, I have made the loss? What is the tax on this? Tax on this is 2 lakh into 40%. 80,000 is the tax. You give me this tax back. Can company go to the government to ask for this? Do you think that government will pay 80,000 of the tax return? Right? Will government come back and say, no, you have made the loss, take this 80,000? No, government will not do that. But what government says, that you have made the loss of 2 lakh, where your tax loss is 80,000, which supposed to be recovered. What we can allow you? We can allow you to recover this amount, right? I am not going to pay it back, but keep this amount with you. Whenever you have any tax liability, keep on reducing your tax liability with 80,000 and then pay us. So in 2019, 20, 21, 22, and so on, up to 8 years, this 2 lakh loss can be carried forward. It means if I have profit in the next year, let's assume 2,50,000. My tax would be this into 40%. How much tax I have to pay in the 2019 in that case? If my tax is 1 lakh, I will say that previous year tax, which I supposed to get back from the government, I will go and adjust this amount here. I will go and ask the government to give me this amount here. So I can only pay effectively 20,000 tax. Is that okay with everybody? But what if I am having 80,000 as my income? If I am having 80,000 as my income, then I would say I will adjust 32,000 here and carry forward the balance. The balance is 80,000 minus 32,000, which can be carried forward further. Again, I got 80,000 here. So my tax would be 32,000. I said I can carry forward, or I can utilize again 32,000. 32 and 32, 64 has been utilized. I just am left with, let's assume 16. So the further, at last, I can only consume 16,000. Is that okay with everybody? This is how I can get the benefit of the losses which I have made today, but these losses can be adjusted to the future taxable profit. When these can be adjusted to the future taxable profit, what I am going to do, I am going to recognize this as deferred tax asset right now. And this deferred tax asset will keep on reducing, right? Will keep on reducing my tax liability going forward. So I will keep on getting the tax benefit going forward. I have just recognized this as an in the books of the company. So loss is going to lead to deferred tax asset. But as I discussed earlier, we need to make sure whether in the next 8 years, if that is allowed, will I be able to recover that amount? If assume I won't have any profit in the future, I believe that I am not going to make any profit in the future. Will I be able to recover that amount ever? Right? If I won't be able to recover that amount in the future, I cannot record this as an deferred tax asset. I hope this is fine with everybody. Right? Is that okay with all? Any question, guys? So if it is 1 lakh and 1,20,000 and 1,20,000. So what I am trying to say, in first year, I am going to adjust the tax with 40,000. In second year, again, my tax will be adjusted with 40,000. So my actual tax liability will only be 8,000, which I have to pay to the. I hope this is fine with all. Any question, guys, up to here? Right. The point or the question which we were discussing there related to income taxes, I think we can discuss. I can see that how it has been addressed here related to the allowance. So here, what we are trying to say, okay. So I think you need to correct that one. You just need to correct this one, as Sora was mentioning, right? What we were trying to say is that something which has already been allowed in the accounting, but my tax rules has not yet allowed me that thing, right? So as per my point here, that accounting has allowed me this thing here, but tax books is not allowing me this thing here. The reason why tax books have not allowed, because that it has not been considered, it has not been amortized right now, right? So sorry, you have to change this answer, right? So please change this here. This is illustration number 1. So requesting all, please ignore the last point which we discussed about the prelim expenses. So as per the understanding now, if prelim expenses as per tax record is unamortized sitting there, what it means that tax books has not allowed that 30,000, whereas accounting books has allowed 30,000. When tax books has not allowed 30,000, it means there is a gap. Gap is that I am going to get the benefit in the future. So this is going to come as deferred tax asset of 15,000. Is that okay with all? Is that okay with everybody? Anyone has any question related to this? Please do ask. So we are done with AS 22 also, right? So we are done with AS 22 also. The next topic which we will cover after this is so AS 29, which talks about provisions, contingent liabilities, and contingent assets. So Prakash has the question. So let me explain this again. Prakash, we have discussed in accounting, there was a depreciation. Depreciation was 2 lakh. Income tax, depreciation was 5 lakh. Means tax allowed me extra depreciation. So difference of this minus this. So I am going to get, means I have got the difference of 3 lakh, which would be coming in my books later, right? Tax has already allowed me that difference. So that will result into deferred tax liability. Whereas prelim expenses, it says tax book shows unamortized amount. Whereas accounting book shows no balance. Unamortized amount means that tax books has not yet allowed 30,000. Whereas, so tax books has not allowed 30,000. Whereas in accounting, the amount has been amortized as 30,000 here. So this is 0 here because it is still showing in the balance sheet, but it is showing here as expenses. So it means there is a difference again of 30,000 here. This difference is the additional amount we are getting. So it will result into deferred tax asset. So this has been allowed to me, but tax books has not yet allowed to me. So for that purpose, we are saying I am going to get the benefit in the future. That is the reason it is a deferred tax asset. Right, Prakash? So the next topic which we were talking about was AS 29 provisions, contingent liabilities, and contingent asset. These are 3 different things which we have here. And contingent. Now, what do we mean by any sort of contingency, right? We can just discuss the brief because we are almost over with our time, right? So we just have 5 minutes, so we can actually talk about the brief of this, right? So brief of this, which we can say here, what do you mean by any sort of contingency? Contingency means that when things are uncertain, when things are uncertain. So AS 29 is recently revised after issue of Ind AS accounting standards. Now after Ind AS, the provision is actually changed. What is the meaning of the provision? Provision meaning is liability. So definition, as per the definition, provision means liability where amount or timing is uncertain. So those liabilities where the timing or the amount is uncertain. Now, can you consider, can you tell me any example where the amount or timing is uncertain, or any example of provision which we can consider, right, in our books? Right? Any amount of provision which you think we can consider in our books. So contingency means when there are certain uncertainties. Now those uncertainties will only come to know when and only when, right? When and only when any event happens, means occurrence or non-occurrence of the event will decide whether this will come over here, come here or not. Right? Now, what does provisions means? Provision means liability where amount or timing is uncertain. Can you think about any example of provision? Any example where the amount or timing, any of those could be uncertain? Or anything, any example for which we create provision? Very good, guys. Right? Everybody has given same example. Provision for bad debts or doubtful debts. Right? Before closing this, I wanted this example only, right? Because that is something which we have learned always, right? But my question is bad debt a liability? If any bad debt happens, do you need to go and pay any amount to your debtor who is not paying money to you? Right? For example, customer has purchased a phone from you. After 3 months, he came and said, I don't have money. I cannot pay you. It is becoming bad debt. Now, will you go and say, no, don't worry, right? You are looking, right? You are looking miserable. So I am giving you more money. Can I do that? No, it is not a liability. It is a loss. That is the reason this was covered under, that is the reason the bad debt was covered under AS4. Right? That is why it has been revised and bad debts has been taken out of this standard and moved to AS4. Is that okay with all? So bad debt is not the liability. Provision for taxes, very good. Provision for taxes is the liability where the timing or the amount, I would say amount could be uncertain because we don't know. That is the example we have seen. But again, taxes, right? Taxes actually nothing but the amount which reflects the portion of my profit, how much profit I need to calculate. Once I get the profit, on that I apply the tax rate. Is there any uncertainty around it? It is a liability, but do we have any uncertainty around it? Answer is no. Not really, right? So what could be the issue when income taxes is not there, bad debts are not there, then what could be the provision? Provision could be, I just give one example before we say, goodbye for the day. That example is nothing like warranties. You have sold your product, you have given warranty along with your product. If product goes wrong, right? If product goes wrong, what is going to happen? You have to fix that product in the future, and that becomes your obligation. How many products? You don't know. When? You don't know. So amount and timing both are uncertain. this case. Employee benefit, again, same concept of provision. You know how much your employee benefit would be, how much your PF would be, how much your everything, right? So everything we know. There is no uncertainty. Okay. So we are closing our session here. We will continue from here the basic concept of warranty, basic concept of provision, and we'll carry out. So thank you very much, guys. We'll see you on Tuesday now.